Hey there, it's Krista from the Accounting Doctor, your compassionate and knowledgeable ally in all things taxes. Bankruptcy is one of those words that strikes fear into people's hearts, but what if I told you it could actually help with your tax debt? Today, we're diving into the truth about bankruptcy and tax debt, what it can do, what it can't do, and why it should always be a last resort. Now, let's get into the big question. Can bankruptcy erase tax debt? The answer is yes, but only under very specific conditions. Here's what you need to know. First off, the 3-year rule. The tax debt must be for a return that was due at least 3 years before you file for bankruptcy. The 2-year rule. You must have filed the return at least 2 years before filing for bankruptcy. And lastly, the 240-day rule. The tax debt must have been assessed by the IRS at least 240 days before filing for bankruptcy. If you meet these criteria, some tax debt, like income taxes, can be discharged. But payroll taxes, fraud penalties, and trust fund taxes, those are non-dischargeable, no matter what. Next, let's talk about the two most common types of bankruptcy for individuals, Chapter 7 and Chapter 13. Chapter 7 is a liquidation bankruptcy. It's quicker and it often only takes a few months, but it can wipe out eligible tax debt entirely if you meet the rules we just talked about. But keep in mind, you might have to sell off non-essential assets. Now, Chapter 13 is a reorganization plan. It lets you pay off your tax debt over 3 to 5 years through a court-approved repayment plan. This option can stop IRS collection actions like levies and garnishments while you're making payments. Now, which one's right for you? That depends on your financial situation, assets, and the type of debts you owe. Now, here's the thing about bankruptcy. It's not a magic wand. Filing for bankruptcy will impact your credit for years, and it could affect your ability to get loans, rent property, or even secure certain jobs. Plus, the process is complex. It requires court filings, legal fees, and careful planning. If you're dealing with tax debt, there are often other options to explore first, like installment agreements, offers in compromise, or even proving financial hardship to get into currently not collectible status. Bankruptcy should only be on the table if all other avenues have been exhausted. If you're drowning in tax debt and considering bankruptcy, don't do it alone. The rules around discharging tax debt are tricky, and one wrong move could leave you worse off. At the Accounting Doctor, we can review your situation and can help you decide if bankruptcy or another tax resolution option is your best path forward. Remember, there is always a solution. Thanks for joining me today, and if you're struggling with tax debt and wondering if bankruptcy is the right move, let's talk. Call us or visit our website, and remember, there's no tax problem too big or too complex for the Accounting Doctor. Until next time, stay calm, stay informed, and let us handle the stress for you.